John Bogle. The idea is not to buy stocks which are gonna do well, but to buy stocks of companies which are doing well. Regular dividends are a sign of corporate health. And so are the monthly dividend stocks. The temptation of monthly dividend stocks is undeniable in the investment world, often seen as the cornerstone of a well-diversified portfolio. These stocks offer a unique blend of stability and steady income, best for both conservative and aggressive investors alike. In this video, we will show you and John 6 of the highest paying monthly dividend stocks you can buy today. We'll show you how much you can earn from your investment of $10,000. We'll show you stocks that can grow your investment to 7 figures. And in the end, we'll show you stocks that pay over $20,000 per month. Coming up next are the 6 highest paying monthly dividend stocks, arranged from modest to highest monthly dividend in the long term. Fun fact, modest dividend stocks have a trick of wealth creation. Starting at number 6 is Agree Realty Corporation. Known by the ticker symbol ADC, this monthly dividend stock is a significant player in the real estate sector. ADC has a current dividend yield of 5.03%, backed by a strong 10-year compounded dividend growth rate, also known as CAGR, of 5.95%. But this stock isn't just about dividend, it's a strong wealth creation stock, verified by its 10-year average annual share price gain of 9.87%. Based on all of these metrics, if John invests $10,000 in this stock after 1 year, he will receive an annual dividend of $503, but with an investment value of $11,490, which includes $987 of capital appreciation. After 10 years, the initial investment of $10,000 will have a total value of $37,393, paying an annual dividend of $1,158. After 20 years, it'll be valued at $123,658, paying an annual dividend of $2,593. And in 30 years, the investment will be valued at $376,268, paying an annual dividend of $5,325. In 30 years, John's total dividend earnings will amount to $66,215. However, as we mentioned, this stock is wealth-focused, as evidenced by the capital appreciation component, which shows a gain of $300,053. This mid-cap REIT specializes in owning single-tenant properties, but with a strategic twist. It focuses on properties that are essential and less affected by online shopping trends, such as grocery stores, auto services, and home improvement outlets. These properties are mostly leased to big-name national retailers like Walmart, Dollar General, Best Buy, TJX, and CVS. ADC's approach to leasing ensures no single tenant dominates its revenue, with the largest, Walmart, contributing just over 5%. This strategy proved especially effective during the pandemic, when ADC managed to collect nearly 90% of its rent, showcasing its resilience. One of the key strengths of Agree Realty is its diversified portfolio, and most of its tenants have strong credit ratings, adding another layer of security to its revenue stream. From a financial perspective, ADC is known for its conservative management style. It maintains moderate leverage, meaning it doesn't rely heavily on borrowed money, and it has strong dividend coverage, ensuring its ability to pay dividends to shareholders. Next, at number 5, we have Main Street Capital. Known by the ticker symbol MAIN, this stock has a current dividend yield of 6.85%, backed by a 10-year CAGR of 3.97% and an average annual return of 4.5%, suggesting the stock is slightly more favored toward the dividend-paying option. John's investment journey with a $10,000 stake in this particular stock showcases a good stable growth over 3 decades. In the first year, the value of his investment will be $11,135, alongside receiving a $685 dividend. This initial growth sets the pace for the next several years. By the end of a decade, his investment almost triples, reaching $28,881, with the annual dividend more than doubling to $1,699. This upward trend continues, and by the 20-year mark, the value of his investment skyrockets to $80,851, with the annual dividend increasing substantially to $4,523. The growth trajectory maintains its momentum, and after 30 years, his initial $10,000 investment grows to an impressive $219,722, yielding an annual dividend of $11,689. Over this period, the total gains are $88,820 in capital appreciation and $120,902 in dividends, illustrating the power of long-term investment and the compounding effect of reinvested dividends. What's remarkable here is that since 2007, Maine has never reduced its regular monthly dividend payments, not even during tough times like recessions. This consistency is a big deal for investors looking for steady income. The sector Maine is involved in is financial services, focusing on providing loans to various companies. These aren't just any companies, though. They're often smaller or mid-sized businesses. What makes Maine a good investment? Well, it's about how they handle their business. They have a diverse portfolio, meaning they lend to over 150 companies. This diversity is key because it lowers the risk. If one company struggles, it doesn't affect Maine too much, since no single company or industry makes up a huge part of their investments. Financially speaking, Maine focuses on first lien secured loans. This means if a company can't pay back its loan, Maine gets to be the first in line to collect what's owed, even taking property if needed. This approach reduces the risk of losing money. Next up, we have Gladstone Capital Corporation. Known by the ticker symbol GLAD, this is a monthly dividend stock from the finance sector. It has a current dividend yield of 9.62%, backed by a 10-year CAGR of 1.21%, suggesting it's a dividend-focused stock. Its price almost never changes, based on a 10-year annual gain of 0.1%. Based on this, if John invests $10,000 in this stock, after the first year, he'll receive an annual dividend of $962 with a year-end investment value of $10,972. Over 10 years, his initial $10,000 investment will have grown to $26,448, yielding an annual dividend of $2,538. After 20 years, the investment's value will be $77,812 with an annual dividend of $8,246. Finally, in 30 years, the investment is projected to reach a value of $257,509, generating an annual dividend of $30,101 or $2,508 per month. In all that time, John's earnings from capital appreciation will only be $2,005, courtesy of the stock's low annual yield, but his dividend gain will have a dollar figure of $245,505. Hey, if you think this is good, wait until the end when we show you stocks that reached 7 figures and pay over $20,000 per month. Gladstone Capital Corporation operates a business development company, BDC, a type of firm that lends money to smaller private businesses in the United States. While lending to smaller companies can be riskier due to their limited financial resources, GLAD's strategy to partner with companies that have private equity support helps mitigate this risk. Moreover, the firm strategically avoids investing in industries like high-tech or financial services, which can be more volatile. Much like Maine, a significant part of Gladstone Capital's portfolio is in first lien debt, making up over 70%. This means that if a borrower can't pay back, the company gets priority in repayment. This approach adds a layer of safety to its investments as well. Next, at number 3, we have Gladstone Investment Corporation. Known by the ticker symbol GAIN, This stock has a current dividend yield of 6.38%, backed by a strong CAGR of 4.47%, and an average for the sector annual share price growth of 1.33%, suggesting a dividend-focused strategy. Based on these metrics, should John decide to invest $10,000 in this stock, he can make an annual dividend of $638 after the first year, with a year-end investment value of $11,490. Over a span of 10 years, his initial $10,000 investment will grow to $23,007, paying an annual dividend of $1,158. After 20 years, the same investment will be valued at $67,446 with an annual dividend of $6,863. In 30 years, the investment is forecasted to reach $272,501, paying an annual dividend of $36,434 or $3,036 per month. In total, the investment will have a capital appreciation of $24,674, with a dividend value addition of $237,827. Gladstone Investment Corporation also operates as a business development company, BDC, focusing on providing financing to small private businesses. What sets Gain apart is its approach to investing, as it doesn't just lend money, but also often takes part ownership in the companies it invests in, making up about 1/3 of its portfolio. This investment in equity or company ownership offers the potential for higher returns compared to just lending money. It's supported by the interest income from its loan portfolio, which primarily consists of first lien secured debt. This means that if a borrower can't pay back, Gain gets first dibs on any repayments. Since 2010, this strategy has enabled the company to pay uninterrupted dividends, with additional supplemental dividends occasionally, reflecting its investment success. However, it's worth noting that Gain's portfolio is not as diverse as some of its peers, covering only about 25 companies across various industries. While this might seem risky, Gain's management strategy compensates for it. They actively participate in the boards of their portfolio companies, guiding them towards growth and profitability. Plus, they focus on established businesses with positive cash flows rather than risky early-stage ventures. Moving on to the big leagues now, stocks that have seven-figure potential and pay over $20,000 per month. At number 2, we have Pennant Park Floating Rate Capital. Known by the ticker symbol PFLT, this stock has a strong starting current dividend yield of 11.06%, backed by a steady CAGR of 1.44%. But PFLT has a negative annual return of minus 2.1% over the last 10 years. This suggests it's focused more on dividends than capital appreciation. And listen, despite the negative return, we'll show you why this is still a good monthly dividend stock. Based on all these metrics, considering a $10,000 investment in this stock, in the first year, John's annual dividend will be $1,106, and the investment value will grow to $10,896. Now remember, this is lower than the $1,106 in gains from dividends because of the capital loss of around -2%. Over 10 years, the investment will grow to $28,117 with an annual dividend of $3,763. The 20-year forecast shows the investment at $127,205, yielding an annual dividend of $22,835. The 30-year projection is most impressive, with the investment estimated at $1,087,845 and paying an annual dividend of $257,315 or $21,443 per month. In total, the investment has added $1,172,569 in dividend income, but there's also capital depreciation of $94,724 due to that negative 2% average annual return. Still, you can see that the stock has a strong potential as the dividend rate and dividend growth offset the losses significantly. Since going public in 2011, PFLT has maintained an unbroken record of paying dividends to its shareholders. The dividend yield of PennantPark is particularly attractive to investors. PennantPark operates in the finance sector, specifically focusing on companies that are in industries that don't fluctuate wildly, like business services, healthcare, and technology. And like any financial company, they mostly deal with first lien senior secured debt. This means if a company they've loaned money to can't pay back, PennantPark is first in line to get paid, reducing the risk of losing money. Moreover, most of their loans include covenants and special conditions that offer additional security for the firm's investments. Additionally, the fact that all of PennantPark's loans have floating rates is significant. This means when interest rates go up, so does the income they earn from these loans, which can be beneficial in certain economic conditions. And lastly, at number 1, our top pick for the year is Sabine Royalty Trust. Known by the ticker symbol SBR, this stock is a monthly dividend stock from the energy sector. It has a current dividend yield of 10.25%, backed by a strong CAGR of 4.91%, and an average annual stock price gain of 1.88%. These metrics suggest that this is a stock that strongly focuses on dividend and dividend growth. Before showing how much you can earn from this stock, let's see why this stock makes it to the top of our list. Formed in 1982, SBR owns royalty interests in oil and gas properties covering over 2 million acres in key producing areas like the Permian Basin, Gulf Coast, and Anadarko region. It's important to understand what this means. Sabine doesn't drill or produce oil and gas itself. Instead, it gets paid a portion of the sales from the companies that do extract these resources from its properties. However, there are a few things to consider. The estimated lifespan of Sabine's reserves is around 8 to 10 years. While this has been the case for some time and new developments have continually replenished these reserves, there's no guarantee this will always be the case. The potential for the trust to wind down in a decade adds an element of uncertainty. So how much can John earn in dividends and capital appreciation from this stock? Based on the metrics we just saw earlier, John's investment journey with a $10,000 stake in this particular stock reveals significant growth over 3 decades. If John invests $10,000 in this stock, at year-end, it will pay dividends of $1,025, and his investment will be valued at $11,213. Over 10 years, his investment appreciably will grow to $35,925, yielding an annual dividend of $4,178. The 20-year forecast is even more striking. By this time, John's investment has expanded to $183,796, and he's receiving a hefty annual dividend of $27,692. However, it's the 30-year mark that truly highlights the potential of this investment. After 3 decades, the value of John's initial $10,000 skyrockets to an astonishing $1,485,739. Moreover, the annual dividend at this stage is an impressive $286,694, equivalent to about $23,891 per month. Over the course of these 30 years, the total financial gain John experiences is substantial. He sees a capital growth of $119,371 and earns dividends totaling $1,356,368. This video talked about the 6 highest paying monthly dividend stocks that grow your investment and pay a good dividend in the long run. But if you want to earn $100 per day from dividend stocks, Watch our video on passive income strategies that make $100 a day with dividends, where we show you which stocks can reach the $100 per day goal in the least amount of time.